In this video, the summer sale of Bitcoin options. You've never seen volatility this cheap before. No one still believes in growth, yet there are cautious purchases happening in the market. And as usual, an analysis of the weekly option strategy. Hello friends, this is the Optionomics channel and I'm your host, Roman Basidovsky. And today, as usual, we'll look for ways to make money with Bitcoin options. Let's take a look at what happened last week and what the previous trade was. It turns out that last week, the market barely moved at all. We opened somewhere around 64 to 63,000. So accordingly, what happened is that the market went down here, then bounced back up. And then it turns out in the following week, which I was working on, the previous forecast, the opening was at 63. There was minimal movement down somewhere to 61. And then accordingly, we bounced back up to 64,500. And you can see that the market is now entering the traditional summer phase when there is almost no movement. But it's precisely because of this that option prices are now very cheap. And despite the fact that not so long ago we saw a rather significant drop in Bitcoin, when Bitcoin literally fell from 74 to around 59 in just 5 days, now option prices are once again set as if no one expects any more movement at all. And a bit later, I will show you why such opportunities are actually quite rare, and I believe they should be taken full advantage of. So, what do we see? Bitcoin has been moving within a range for quite a long time now. That is, even though we did break below the 60 level, we haven't really moved much further down from it. And that level of 60 and options open interest that I showed earlier. And I mentioned that this level would most likely be held, and in the end, it really was held, and we still remain within the wide range that was from 80 to 60. And it turns out, if we open the monthly chart, we can see that the range has already been ongoing. There was a decline for 5 months, but in the end, as we bounce back, the market basically still remains within the same range. And as for what happened in the previous trade, I bought specifically 7 call options at 67, expecting that the market could rise. And by the way, I still believe that growth is more likely. And 5 put options in case of a crash. And note how much I spent on them. In total, it came to $135. And at the same time, it was quite a wide position, meaning 67 call options and 56 put options. So from the middle, if you look both ways, the width of such a strangle was 11,000. So it's quite wide. Today, I'll show you what you can buy right now. A strangle is now much cheaper and much narrower. So it turns out that when there hasn't been movement for a long time, by the way, right now it's actually not that long without movement, options get cheaper, and you can buy a narrower and narrower corridor. And if there is a breakout, then after a long period of declining volatility, such a breakout will bring much more profit. So what do we have at the moment? I'm gradually slipping down after a good profitable trade. And take note, in fact, you can already see from this chart how a typical volatility buying strategy works. That is, we stood still, dropped, bounced a couple of times, there were small spikes in volatility, but then suddenly there was a really good trade. Then it happens again. 4 months of losses, 1 good trade, and a new high. Now we see that we're following the same scenario as before. Since I reduced my risk after a good trade, we're currently declining slowly. But even now, in fact, with current option prices, I want to gradually increase the risk because, well, it's very cheap. It's as if no one believes in a move, but in the market, most often when no one believes in a move, that's exactly when it happens. And let's move on to the traditional plan and make a forecast. After the forecast, accordingly, we'll choose an option strategy and then estimate the risk that can be taken on this strategy. It turns out that for Bitcoin at the moment, since there hasn't been a good bullish week for a very long time, I've mentioned this more than once in my videos, I expect that this current consolidation, it shows that there is some accumulation going on. That is, and in fact right now, according to some metrics, you can see that there are cautious Bitcoin purchases happening, and finally people have actually started to buy little by little, because the 60 level is already more than a 50% drop if we take it from the maximum, and in general for many this mark is already becoming attractive. And that's why I believe that at the very least some kind of rebound to 70 to 80 is quite realistic. So I'll take the upper boundary at 68,000. That is, I think that by July 17th, when the expiration happens, we will be at this level. I believe that it's quite realistic to rise above this mark within that time frame. And a bit later, I'll show that I'm still keeping an eye on the series. It's been a long time since we've seen a 10% increase, and this streak is still ongoing. That's why such a rise could give at least 15 to 20 times returns, maybe even more, on the options I'm planning to pick for the upside. At the same time, as I mentioned before, I wouldn't want to be left without an offensive position, because the conflict in the Middle East and so on in general geopolitics can bring surprises at any moment, especially with Trump involved. That's why, just in case, I'd like to have some kind of option like the 58, Y58. The reason is that if we do end up breaking down from this consolidation, then we need to take an option below the lower boundary. In this case, 58 is our lower boundary. And if the market does break through, I think we could really move, say, by the width of this little corridor. And if we estimate, for example, that a similar movement might happen, here the movement was roughly from 70 to 60, about 20%. So from here it could drop another 20%. I think we could easily hit 50 basically. So by the same distance, the market could potentially move that far. I think if there's panic or some kind of escalation, in principle, it could reach that level. But for now, I'm still more optimistic because in my opinion, things have already gotten really mixed up with Bitcoin. That's why I set the upper boundary much closer and the lower boundary further away. So for the market to reach the lower boundary, it would need to move more than 10%. To the upside, it's about 6%. All right, let's calculate now. No, 7% will be enough. So my forecast is that the market could move either more than 7% up or in a negative scenario, more than 10% down. And accordingly, my loss will be within this range. If it goes beyond this range, there will be a profit. And let's take a look at what the current option prices are. Let's look at the Vela website and see what's happening at the moment. I've set a large scale on purpose. And you can see that even though just 3 weeks ago we quickly went up to 60, look how fast volatility was sold off back. Fear disappeared instantly. In my opinion, I think that under the current circumstances, these prices are cheaper than the market could really go there. And we are practically at the lowest levels in the entire history of Bitcoin options trading. So right now, implied volatility is about 36 points. The historical minimum was, let's see how much it was. Well, it turns out it was somewhere around here, 32. So basically another 10% down, and we'll see the lowest price ever recorded for Bitcoin options. And that's why I think right now is actually a great time to buy. Even if the move doesn't happen, the loss will be small, limited to the size of the premium. But if it takes off, the returns could be really significant. And so looking at the Delta SQ chart, you can also see that, let's try to take a broader look now. You can see that the fear is fading. So at that moment, on the 23rd, for example, options, the market was really expensive, but now compared to call options, they've dropped. And actually, if you look at what was happening in January and now, but now, of course, there is still some fear, but in my opinion, it's not as significant anymore. In other words, the market has calmed down a bit, so at this point, movement is basically equally probable, although put options still don't look much cheaper. And let's move on to the weekly table. Let's see what we have for the U7 series. The following is apparent. So this week was very narrow. The range was only 3.13% up and 2.28% down. Honestly, I can't even remember the last time there were such narrow weeks for Bitcoin. So our absolute maximum movement was 3.13%. It's actually interesting to see what the smallest historical movement ever was. The smallest one was 1.37%. But now it turns out that for 2 weeks in a row, we've been stuck in a very narrow range. Here we have 3.8%, and here accordingly 3.13%. Before that, there was a good week with a 9% move down, but in the end, it still bounced back. And so you can see here a 17% move, a really big one, which I had been waiting for a long time. Before that, it was only, turns out, 5 weeks ago. And this series I mentioned, already 86 weeks without a 13% move, and also it turns out 63 weeks without a 12% move. 63 as well. Yeah, I'd really like to catch, if there's growth, a week with a 12% move. And it turns out that 63 weeks. And then we can see how much you could earn on such a growing week if it happens. Now, let's take all of this detailed weekly data and move right over to the comprehensive backtester tool to see the results. By the way, just out of curiosity, we can also check the greed and fear index to see what's happening with it. Yes, you can see that at the moment we are still in the fear zone. But I believe that this is exactly what creates opportunities for the market to grow quite well. And since there are currently no major significant changes in open interest, we won't be making a choice today. So let's go to the backtest. Look at what the backtester shows. If we take the long options, what do we see? We see that the green triangles are positioned very high. This means that options are so cheap that, in principle, even considering the sum of volatility, the chances of making a profit from buying them are very high. And let's see what we have. Now let's try to set the risk percentage. That is, if we take options not based on the number of Bitcoins, but on a specified amount. Well, for example, for $100. And so let's say if we are going to risk, let's say 1%. And you can see that the most profitable from this point of view are the 72 call options, which can be bought for $10. That is, if there really is a 12% move, but by the way, it might not reach 72. And you can see that on such options historically, if we had bought at these prices, we could have made 3,400% profit with a risk of 1. At the same time, the maximum, it turns out, was like this. 123 losing trades. Yes, it seems that here it still doesn't quite calculate the maximum drawdown correctly, because if we look here from 4,595 from 4 million, it dropped to, it turns out, well, yes, it turns out it takes the maximum drawdown, which is if we risk by percentage. At the very beginning, which was the case, but there, it turns out it never dropped by more than 10%. Of course, it will need to be recalculated a bit. So basically, you see, with a maximum losing streak of 123, well, actually, you could have gotten into trouble here if you were risking 1%. So in my opinion, 72 is, of course, quite far off. But if the risk was small, then you could be waiting a long time for trades like that. Although, well, of course, I think that not everyone will be able to wait that long. So it turns out that since 2024, there haven't been any trades like that. That is January, February. Yes, yes, yes. So it turns out that Bitcoin would have to move now for this trade to work out, probably by about 18%. At the same time, look, it's interesting that the maximum you could have earned 759%. That is, if such a super trade had happened, it would have brought in 759 times. Overall, that's a bit extreme, so let's look a little lower. Here, for example, are the 70th options. Now, this is already much better. Notice that the maximum losing streak is 63 weeks. Of course, I understand that for many, that's pretty hardcore. Like, seriously, waiting for more than a year. But here, it's also very interesting. So the maximum profit you could have earned is 371% with a risk of 1. So that comes out to 370x. That looks really great. But again, by the way, here the win rate isn't so bad. It's 8.8%. So that's almost every 10th trade. But again, you can see that right now this streak is lasting a very long time. Since January, February, March, since April 2025. Let's scroll down a bit more. 68. And now this, I already like. So look, the 68th option is currently priced at $70. The win rate is 15%. So that's about every 6th trade. Well, no, not every 6th, but about every 7th, roughly. Here, the trade is profitable. The maximum losing streak was 40 weeks in a row. And it turns out that, interesting, wasn't it happening just now? Oh, it's still going on. Yeah, probably. It's actually happening right now. And the maximum you could have earned on such an option was 157 times. So basically, it turns out that one such trade covers 3 losing years. Considering that there are about 53 weeks, yeah, so just one trade is enough to cover such losses. And accordingly, I like this option, and I'm planning to add it to my portfolio. And now it turns out that for put options, notice that the most profitable one is the 50-second. It costs $5. Out of 340 trades, it turns out there were only, how many were profitable? 1, 2, 3. 3 profitable trades. But one profitable trade could have brought in 1,890 times the return. So this situation, of course, once again serves to highlight exactly what Nassim Taleb talked about in his work, explaining that a black swan event is very much like the life chart of a typical Christmas turkey. This bird eats a plentiful meal every single day and gradually begins to think that life is wonderful and safe until suddenly, on Thanksgiving Day, she unexpectedly gets killed. And it turns out that everything she relied on up to that point turned out to be untrue. So it turns out that the turkey has no way of assuming that something bad will happen because every day she's fed, she walks around, everything is fine for her. And then just like that, in a single day, it's all over and that's it. And so what this shows is that you can keep losing 1% for a very long time, and then one trade comes along and it brings in 1890 times. So for someone, this could be that very life-changing moment when it happens and it turns out that you wanted to win the lottery and you actually won it. But of course, for me, that's a bit extreme. When only 3 trades out of 340 are profitable, that's less than 1 in 100. And you could go 212 weeks without catching something like that. So that's about 4 years. By the way, that's exactly what's happening now. They've been going since 2022. There haven't been any such trades. So let's look at something less extreme. For example, number 54, an options put. This one's already better. Here, it's one profitable trade out of 50. And the maximum you might have to wait is how much? 191. 191 weeks. So if you think about it, that is actually still incredibly and remarkably extreme. Oh no, wait a second. Let me look at that again. The maximum losing streak was 119. So 119 is just over 2 years. Again, I think not everyone is ready to wait 2 years for a single trade. So let's move even closer to the 56 options. By the way, not much has changed. Let's go even closer to 57. Now at 57, it's already better. So here the maximum losing streak was 68 weeks. That's roughly a year and a bit. And the ones I like are at 58. Here the maximum wait is 45 weeks. That's just under a year. But since we're buying volatility in both directions, now let's see what it looks like if we have a portfolio of both call and put options. What's there? So separately, if we're waiting for a call option or a put option on its own, with puts, of course, there are such tough situations as waiting almost a year. It's hard to wait that long. But at the same time, look, with just one trade, you could have made 267 times, which is actually really cool. In other words, one trade could have made up for 5 losing years. So this option already suits me. That is a win rate of 6.7% or 1 out of every 20 weeks. And so basically, I've already added these options to my portfolio. And look, it turns out that we took call and put options, backtested them, and here's what we see. You can see that now the maximum losing streak is much smaller, just 16 weeks, which is about those same 4 months I was expecting. So 4 months, turns out we had exactly 16 weeks, and we no longer have those 5-week streaks. So basically, if you look at the records, it turns out that maybe you'd have to wait 11 weeks. But notice the chart is very nice and upward trending. And it turns out that you could have made a total of 849% with this level of risk. And what risk did I choose here? Here I chose a risk of $786 per trade. So at the current size, that's about 0.8%. So if the market goes up by the very 12% that I'm expecting, that means there will be a move to 7,600 up, which is about 71,600. And then with a risk of just $700, you could earn $17,000 in total, which is approximately a 1 to 3 ratio. And if the market suddenly drops by those same 50, that is, if there really is some kind of super crash, well, in that case, of course, there could be a very good profit. But again, during downturns, there really can be super profits. Good profits, because swans going down are often much scarier. That is, the market can fall very sharply. And since volatility this week is very cheap, I'm not planning to open any other more complex positions. And I plan to carry this position into next week. So in general, it's that simple. Today's review turned out this way because basically the trade was quite obvious. And I will wait for a sharp move. Friends, thank you for watching the video until the end. I would appreciate it if you support me with a like or a comment. And see you next Sunday. And I would also like to remind you that all my videos are not individual investment advice, and all trades you make at your own risk. And as usual, I recommend simply not risking more than 3 to 4% in trades on weekly options. And when it comes to percentage risk, I'll also remind you that you will never lose your entire deposit, because after a series of losing trades, you will lose less and less with each subsequent trade. That's why this strategy is also very good from this perspective. Risk management. Well, friends, this was Roman Besadovsky with you, and I'll see you next week. Bye.